Hello and welcome to my July portfolio update, so please like, subscribe and leave comments if you enjoy the content. First of all, let me start by sharing with you my investing journey. When I first started investing, the book Rule 1 by Phil Town was recommended to me. And it is the best book I've read, ahead of countless others, when first getting started. It gives you the mechanics of investing with specific criteria, and details on what to look for, and metrics to use when picking stocks. I am hoping to create a key takeaways video about his book Rule 1, later this year. Meanwhile, whilst I learned how to invest into individual stocks, I started to invest in ETFs, such as the S&P 500, as well as the whole world ETFs, and bonds, which provide on average about a 10% gain year on year. So these tend to be fairly safe investments. If you put money in each month, and leave it alone, time will make you the gains. But what I really wanted to do was pick stocks for myself. So, whilst reading Rule 1, I wrote notes on his book, and started to create my own spreadsheet to enable me to track and record the stocks I am interested in. As I started, the more I learnt, the more I realized I needed to expand my knowledge and understanding of investing, and the jargon used within accounting, and the stock market. I created my own automated spreadsheet, based on my research of different formulas, and started to collect specific financial information about the companies I was interested in, based on the main concepts initially provided by Phil Town, but later from Terry Smith, Joel Greenblatt, Warren Buffett, Peter Lynch and a number of other super investors. I created a spreadsheet that was an ultimate one-page record. It focuses on my 12 key pillars for the company, over the past 10 years. During my stock analysis videos, I share a simplified version of my investing process, without overly complicating the content with too many metrics or details. Today, I am going to share with you the companies I've bought and sold over this last year. Generally, I either buy and hold for the long term for a period of 10 years and beyond, or hold for the medium term, which is up to 2 years, or short term, which is up to about 6 months. This depends on which strategy I am wanting to implement, based on the story of the company and the value I believe the company is worth. A stock I owned was Capri. My average share price was $33.92. The Tapestry buyout deal looks to have collapsed, so I decided to sell the stock. This purchase was always going to be a bit of a punt, and represented a decent return if it worked out. I sold Capri at $33.25, which results in a loss of 1.98% at the time. Capri made up about 1.74% of my total portfolio. A stock I owned was Estée Lauder. My average share price was $157. Their recent earnings report showed continued problems and revenue decline, so I decided to cut my losses. Whilst this hurt, I've learnt a lot. Later on, I am hoping to create a video based on the lessons I've learnt. So, keep an eye out for it. I sold Estée Lauder at $96, which resulted in a painful loss of 39%. To be honest, I should have sold sooner, and I know that selling now locked in those losses. But I felt I could better invest the capital into other stocks, so I sold. At the time, Estée Lauder made up about 4% of my total portfolio. I purchased Fortinet earlier this year, and my average share price is $58.74. I plan to hold this company for the long term, however I am happy to buy more if it goes below the $55 mark. I would make a loss of 5.71% if I was to sell it right now. This company makes up about 10% of my total portfolio. The next stock I own is Alphabet, and my average share price is $103.63. I plan to hold this company for the long term, and I don't intend on selling this stock, as I think Google is an excellent company and has an incredible future of further growth. My return if I was to sell now is 55%. This makes up about 24% of my total portfolio. Last year, I bought JD.com, and have added to my holdings since. My average share price at the moment is $26.54. I am prepared to wait until JD hits my price target of $45 per share. If it was to get to my target, I would see a 90% return. However, if I was to sell out of my position today, I would make a loss of 5.68%. This makes up about 11% of my total portfolio. A stock I bought back in January is Novo Nordisk, and my average share price is $108.84. I plan to hold, and possibly add to this company at the right price, as I believe they are another incredible company, with an excellent management team. If I was to sell out of my position, my return would be 16%. This makes up about 13% of my total portfolio. I purchased Paycom last month and my average share price was $149. I did plan to hold this company for the long term. However, with the growing sense of market uncertainty, I decided to cash in on the small profit I had made. I wanted to have a greater pot of cash available, so I could double down on some of the investments I already had, or to hunt for better bargains. I sold at $161 per share, so I made 8% return on this investment. A stock I own is Palantir. and my average share price is $21.17. But I plan to hold this stock for the long term. However, I do plan on buying more if they go below the $21 mark. If I was to sell out of my position today, I would make a 27% return. This makes up about 6% of my total portfolio. Another stock I own is PayPal, and my average share price is $57.94. I plan on holding this company until it hits my price target, or if I lose faith in the CEO in delivering on the potential growth. My price target is $90, and will produce a 53% return if I hit this target. At present, if I was to sell at today's price, I would make a gain of 8%. PayPal makes up about 9% of my total portfolio. I've also bought Starbucks this year, when the share price hit $72.24. My price target is $100, but I haven't built up a full position for this stock, and would buy more if it goes below the price I previously paid. This would potentially give me a return of 38%. At present I am up 4% from my buy price. This makes up about 5% of my total portfolio. A stock I own is Arista Networks, and my average share price is $324.37. I plan on holding this company for the long term. I don't intend on selling this stock, as I think Arista Networks is an excellent company, and has an incredible future of further growth. At present, I would break even if I was to sell today. This makes up about 8% of my total portfolio. These are the companies I currently own within my portfolio. As I said at the beginning, I have 3 categories for holding companies: the long term, medium term and short term. The companies I plan to hold for potentially 10 years are Google, Palantir, Novo Nordisk, Amazon, and Arista Network unless their stories change. I plan to hold PayPal, Fortinet, and Edwards Lifesciences for up to 2 years, or possibly longer, if I see further recovery or greater potential growth down the line. Whereas JD.com and Starbucks are companies that could come out of my portfolio within the next 6 months, depending on the narrative around them. I ended up selling a steal order as sometimes you have to cut your losses, especially when the stock market presents you with other buying opportunities. And like Peter Lynch said, a success rate of around 60 to 70% is considered good when buying stocks, as not every stock is going to give you a home run. In summary, I like to hold a concentrated portfolio as I find it easier to manage and maintain. I tend to pick stocks based on the strategy I wish to employ or the opportunity they represent. If I am holding a company which has reached an acceptable return, I will consider selling it, if I can see another stock which has the potential to make at least a 20% return. Whilst my strategy and process might not be what others like or agree with, it works for me, as I am very happy with the gains I've made. If you have enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow.